I received your payslip, and as I understand it, you are confused on how the withholding tax is computed. Don't worry, I got you covered. Welcome to Tax You Know. There are different types of withholding tax in the Philippines, but in this vlog, we will explain to you the basics about withholding tax on compensation. What is withholding tax on compensation? By definition, it is the tax withheld from income payments to individuals arising from an employer and employee relationship. In computing the tax, we need to understand the following terms: your annual gross compensation income, what are the allowable deductions, and the net taxable compensation income. Let's explain these terms briefly. The annual gross compensation income refers to all income received by an employee from his employer. It includes your regular income and other supplementary income. Allowable deductions are the income or contributions excluded from the gross income. Excluded meaning it is being deducted from your gross income. Some of the examples are the employee contributions to SSS, PhilHealth and Pag-ibig, de minimis benefits, non-taxable bonus, etc. Next is the net taxable income. We get this amount by deducting the allowable deductions from the gross compensation income. The net taxable income is the basis of computing our withholding tax. Now that we know the basic terms, how do we compute the withholding tax?
Your withholding tax rate will depend on your salary bracket based on the BIR tax table. Now, get your payslips and check how much is your annual salary. Assuming you have an annual gross compensation income of 250,000, based on the tax table, your withholding tax rate is 0. An annual income of 250,000 and below is exempted from withholding tax. The next salary bracket is 250,000 to 400,000. If your annual gross taxable income is between this bracket, you will fall under the 20% tax rate. It means that 20% tax will be charged on the amount in excess of 250,000 but not more than 400,000. So if you have an annual taxable income of 300,000, the first 250,000 is exempted, then the excess of 50,000 will have a tax of 20%. In summary, for an annual net taxable income of 300,000, the annual withholding tax is 10,000. The same formula applies on the succeeding salary brackets 400,000 to 800,000, 800,000 to 2 million, 2 million to 8 million, and above 8 million. The maximum tax rate is at 35% for above 8 million annual income.
Now let's apply the withholding tax computation in our monthly income. First, it is important to know the frequency of the salary payouts by employers. There are companies who pay their employees once a month, twice a month, weekly, or daily. This has an impact on how we compute the tax and which tax table we are going to use. Let us look at these two payslips given once a month. We need to use the monthly tax table.
The first payslip has a gross taxable income of 20,000 pesos. Applying the monthly tax table, it is exempted from tax because it does not exceed the 20,833 salary bracket. In our second payslip, the gross taxable income is 27,000.
Then we apply the tax rate. 20,833 is exempt from tax or zero tax. The excess of 4,892 is subject to 20%, which gives us a tax of 978.40. To summarize our two examples, the first payslip has zero tax because it is exempted.
The second payslip with gross income of 27,000 is already subject to tax amounting to 978.40 because it exceeded the maximum amount.
Here is a comparative income to show the increase in withholding tax. It means the higher gross income you have, the higher tax you get. The lower income, lower or zero tax will be applied. Got it? So that's how we compute our withholding tax. So the next time you receive your payslip, you know what to do. Grab a tax table. On our next vlog, we will explain the statutory deductions on your payslip. Don't forget to follow, subscribe, and click that ring button to notify you on our next vlog.